Welcome to Short View Trading. It's Monday, 24th of October, around 9 a.m. London time. So what matters for traders who want to trade these markets on a 1 to 2 week basis? On that swing basis, when you're thinking about trading equity index futures, S&P 500 futures, NASDAQ futures, or other equivalent equity indices, what should you be looking at? What should you be focused on? How should you go about trading these markets on that 1 to 2 week time frame? That's what we want to talk about in this video. And in that respect, the key question market participants are now asking is, have we reached peak Fed hawkishness? Indeed, on Friday, there was a really important article out from the Wall Street Journal, written by a journalist called Nick Timiraos, widely regarded as the mouthpiece of the Fed. And in the article, he talked about the idea that some committee members on the Fed are now suggesting that a pause in early 2023 would be sensible to assess the impact of all the rate hikes that have come into place so far that have been enacted by the Fed over the course of this year. Added to that, he also talked about the idea of maybe the December hike might not be quite as dramatic as the market previously thought. Now, that sparked a major rally in equities, a major rally in bond prices with yields coming off, and really got the markets moving quite meaningfully. It also impacted the forward rates curve and what the market's pricing in terms of peak Fed fund rates. Previously, we were looking at close to 5% in the middle-ish of next year. That's now been brought forward to March time, with the peak Fed funds of 480-ish. So the hawkishness has dialed back a touch. The markets love that. They rallied on the back of that meaningfully. And as you can see on the chart in front of you now, 10-year bond yields came off dramatically intraday, having peaked just ahead of that article, off dramatically on Friday and slightly lower overnight in Asian trading. So as you can see from the chart in front of you now, there's a very tight correlation between real bond yields, which is a significant part of the nominal bond yield, and equities. And whenever real bond yields back up, equities underperform this year, and vice versa. Whenever real bond yields come off from their high levels, equities rally. Now, that's been the correlation in 2022. So there's a very strong argument that if we've reached peak Fed hawkishness and real bond yields start to soften a bit, then the equity market can breathe and rally from here over the course of coming weeks. So the real question we've got to ask ourselves is, has a bear market rally begun? Have we begun a major bear market rally after several weeks of base building over the course of October? And that's the sort of question we look at each and every day, and we think about each and every day in the Daily Rag. So if you're interested in subscribing to the Daily Rag or taking a free trial, please click on the link below and we'll send you the Daily Rag for free for a bunch of trading sessions. Simply put in your name and email address, or if you're a subscriber, head to the website and you'll get the latest from there. So what are we watching this week? Well, there's a whole bunch of stuff that really could propel this market higher, but of course also holds some risks as well. But in particular, I'd focus on the earnings reports out of the States, the third quarter earnings reports. We've got all the big tech names over the course of this week, particularly Tuesday, Wednesday and Thursday. Microsoft, Apple, Google, Amazon, Twitter, Meta, a whole bunch of them that are likely to have a big impact on the way equity prices and the market move. So all eyes on those, but also all eyes on a couple of central bank meetings. We've got the ECB on Thursday, and we've also got the BOJ at the back end of this week, as well as the Bank of Canada. And all of them are expected to be doing something, except for the BOJ, who's probably going to hold pat. But all of them are interesting in that respect. The BOJ is under a lot of pressure to move its yield curve control, remove it or widen it or something along those lines. The market pressure's intense. The gap between 30 and 10-year Japanese yields is very wide, illustrating that pressure that's coming upon the BOJ, but I expect they'll hold the course. The ECB has been very hawkish, but will they take the lead of the Fed to dial that hawkishness back a tad? And then, of course, we've also got the Bank of Canada. Over and above that, there's tons of macro data, some flash CPIs from France and Germany, some Q3 GDPs from US, France and Germany, and a whole bunch of other stuff over the course of this week. So that's it from us. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.